Microsoft also reporting strong earnings. Joining us right now is Portfolio Wealth Advisors President and Chief Investment Officer Lee Munson. Lee, good to see you. Thanks for joining us.
Well, thank you.
Your take on the tech earnings so far. Obviously, Amazon leading the way this morning.
Oh, absolutely. I mean, okay, this was a week where the bears really wanted to take control. They wanted to have Amazon earnings defined by some tweets from the president. That didn't happen. And even in my own notes that I wrote you yesterday, earlier in the day, I said, well, the only problem with Amazon is when they jack up the price for Prime memberships eventually, the stock tanks and becomes a buying opportunity. I'm completely wrong on that. I don't think Amazon is going to tank today on that announcement just because the revenue is going to bump up. Facebook's great. Intel, not left for dead. So I think the bears don't really have a leg to stand on. And then even the places where they said was going to be a problem. For instance, they said, well, Altria, the old Philip Morris, they'll have bad earnings. They didn't. Restaurant stocks, Chipotle, Domino's, all beating. And I'm not done with banking stocks. We had bad reports from Deutsche Bank. Please, that's like saying Alcoa represents industrials. And then Barclays, outside of a little weakness in their investment banking unit not being able to compete with America, they have some big fines. So I think even the Euro banks are not putting any type of rain on this parade.
Lee, everybody knew it was going to be a great quarter coming in, and we were anticipating every sector was going to beat on the bottom line. 9 out of 11 sectors were going to beat on the top line. It's exceeding expectations, but is that a worrisome given the fact that we're having rising input costs? The Fed's going to raise 3 times, possibly 4. Where do you see us going from here? Because it's great. I see Amazon's now up 7%. I think it's a great stock. They were talking about basically Prime memberships going up. This stock, it's not going to impact 55% of families in the United States have it, but all the good news is already out there.
Well, it is, and that's why we had some grumbles this week, right? I mean, when the CEO from Caterpillar says we might have peak earnings at Caterpillar for a little bit, that really disturbs people like me. But we know about those higher input prices, right? Those are known knowns right now. So I don't like if analysts are going to guide upwards. I just need the earnings that we thought we were going to have this year to make this market still be able to get to, say, 2,900, 3,000 on the S&P by December 31st. But yeah, that's a good point. Next quarter, we could be in for a little softness simply because we've raised expectations so much.
But Kevin, you're right that this week, one of the concerns that we haven't seen more of a real pop in the markets is because you've heard from the likes of American Airlines and 3M that these higher oil prices, not just, you look at a range of higher input prices, but just oil is putting pressure on their expenses this year. And any which way you cut it, this is not good news for the stock market. Either it eats into profit margins for these companies, or if they try to pass on these costs to customers, that hurts the ultimate customer. It's bad for the market. It's bad for the economy.
Lee, can you talk a little bit, just to Dagan's point, she's talking about oil and gas. We got a little bit of inflation there. Every single day we're talking about whether treasuries are going to, exceed 3%, how fast that's going to go. I mean, are you concerned at all about where interest rates are, or do you think we've got a long way to run before that really has a meaningful effect on valuations and what's going on in the stock market?
I do, and my quick comment on oil is I have a lot of clients, a lot of my clients out here that are in the gas and oil business. I am zero convinced that we're going to have sustainable higher oil prices. There's still too much supply. In terms of interest rates, I have a very basic thesis. Until I see that 10-year Treasury at 4 to 4.25, I'm not concerned about the balance sheets for corporate America. So I think that we have a lot, I'm sure that once we hit 4%, it's going to be a problem. Until then, it's clear sailing. I'm not concerned about inflation. In fact, a lot of the mutual fund outflows that we saw, that was really about volatility. It was about inflation. I've only had one client, shout out to Aubrey out there, who's had inflation concerns. Most of my clients are mostly concerned about top-level media risk, like what the president tweets at this point.
Yeah, what about Apple? Apple's going to be reporting in May, and, there's now an increasing feeling that the company misses the estimates. Dan Niles certainly was one of them who came out and said, what we saw in terms of the tech wreck a week and a half ago with the semiconductors and the companies tied to Apple is an indication of what's to come. What do you want to do with Apple, or do you think that undoes markets when Apple reports in May?
Well, I think, Apple used to be such a bellwether, and it still is to a certain extent, but it's no longer the golden apple rally, kind of a reference when only golden apple would go up a few years ago. My point is that I think Apple is going to mess up on earnings. I think that's a stock that I'm most concerned about, but I no longer believe that Apple defines the market's momentum today. 2 years ago, I think it would be a more material issue.
Okay.
I think I'm more concerned about Amazon, I'm more concerned about Facebook, and some of these little tertiary things like, is Tesla going to go broke? I think those are going to be the things people are going to focus on. I think Apple's a little long in the tooth to dominate markets. Just like, Intel's great that they beat, but I don't think Intel also is going to really define a tech wreck at this point.
All right, we will leave it there. Lee, good to see you. Thanks so much.
Thank you.
Lee Munson joining us. Coming up next, stop the White House. German Chancellor